All right, Eddie, let's see what diagnosis codes we can add today. Woo. COPD. I came in for a sore throat.
Hey guys, Curt Graham back again from Elite Insurance Partners for another Inside the Industry and Inside EIP. Today we're talking about what's going on in the healthcare industry. If you were paying attention overnight, talking about this past Monday night, the stocks for all the major insurance companies dropped dramatically. I'm talking 8 to 15% in some cases. Probably pop those up on the screen, but ultimately, what ended up happening is the Trump administration announced that they are doing a smaller increase to the reimbursement rates for Medicare. We were expecting somewhere in the range of 4 to 5%, which is kind of what was being telegraphed. And now we're looking at more like 0.9% is what they announced actually on the CMS website. We're not exactly sure based on what they said, but we've got some insights and some thoughts based on everything we've been seeing coming out in the news and everything that's been going on last year. Jagger, I mean, what do you think about what we've been seeing, and what's your just like initial feelings on this announcement and how it's affected, our industry?
Yeah, I mean, there's a lot of volatility, of course, in the Medicare Advantage space right now. We've had volatility, of course, in the Medicare Supplement space over the past few years, too, just from rising healthcare costs. They're still trying to figure it out from COVID and talking to the carriers. And we've got a lot of roundtables that are coming up with a lot of our core carriers in the upcoming weeks. Kind of talk more about what does the outlook look like the rest of 2026 going into 27. But Medicare Advantage specifically, because this is what this affects, is, it kind of ties back to Trump's, the great healthcare plan. And I know you did a great video on that, even though Trump had a 5-minute, I think his was like 5 minutes. We didn't get a ton of detail off of it. You were able to go do some research off of it. But I mean, this really ties in with the great healthcare plan, fraud, waste, and abuse. I think more so. And of course, they haven't come out and publicly said, hey, this is the reason why, we're only proposing 9 basis points, right, is essentially what they're now. It'll be a little higher than that if we look at years past, all the way from 2023 to 2026. It's always finished a little higher, but we're not talking much higher. So we're talking maybe 1% increase, is kind of what we would speculate might be, unless something drastically changes.
I mean, overall, the Medicare Advantage world has been kind of up in the air for the last 3 or 4 years. If you look at what the final rule of 2024, 2 years ago when that came out, that was the only thing anybody was talking about at Medicarians, MedicareCon, all the big conferences. That's what the entire conference was about. People were running around and worried about it. And I don't think we had as much context now about it, right? I feel like the communication back then wasn't exactly there. I feel like we're getting a little bit more telegraphed information from the administration in a couple different ways. I think one of those is with all of the cases that we've seen coming out from the DOJ in the last year. I mean, it's been nonstop. I just this week, Kaiser Permanente ended up settling a case where $500 million, it was like $500 something million that they ended up having to settle, and it was based on what you're talking about. And when we say fraud, waste, and abuse, right, it's not just outright fraud. A lot of times it's kind of fudging the numbers when it comes to coding on things. They're pushing different aspects of their billing. A lot of times that's in Kaiser's case, it was they were farming their clients. They had doctors actually going through the clients and going, who's the person that we think is the most likely to have more codes that we're not currently billing, then going into that person's file and going, we probably can get a couple more codes out of this person, right? And codes, billing codes is referring to the actual diagnoses that somebody has.
So we had a previous conversation. I didn't know this. I mean, I just learned something today, and I learned a lot of new things. But this is something new to me. Go into what we had talked about in regards to me using the example of you go pay cash for an MRI, and just for simple math purposes, you go say to a doctor, "Hey, I've got cash." Okay, well the rate's $100 for an MRI. However, I've got insurance with ABC company, right? Okay, well, it's $1,000. Explain to our viewers kind of how the way that you explained it to me, because it painted a complete and total picture of the 3%. They can only have a profit of 3%. Explain that.
So one of the ways that the government has come up with their solution to overpaying is they tell the companies, hey, you can only have this much profit, a percentage of the overall bill. So it's a cost plus situation. They do this not with just healthcare, but they do it in the defense industry. They do it in just about every industry. And it sounds good in theory, but in reality, what that ends up doing is the only way that I, as a company that's billing the government money to make more money, is I need to raise overall cost. I can't be more efficient and lower the price of my services to the government and make more profit. The only way I can make more profit is by actually driving my cost up. And so that's what we're seeing.
So use simple math, right? So let's just say it's $100 million, right? So our revenue is $100 million, and say it's the most you can have is a 5% profit share, right? Yep. So 5% or 5% profit, right? So that means that you got a $5 million profit. Well, now if all of a sudden they increase that, say, from 100 million to 200 million. Well, that 200 million at that same 5% is now, right, 10 million.
Yeah.
Right. So the idea, it's a broken system. The system's broken right now in regards to the more that, and I never understood. I'm like, well, if you can go pay cash at $100, why are these carriers, negotiating a higher price? And I know there's other things aside from what we just said. There's a multitude of other things that go into it. But why do insurance carriers say, hey, I'm going to pay $1,000 for you? Hey, I'm going to actually pay you way more than really what you need and what the service is costing you to ultimately do it. Now it makes complete total sense. Now let's go back to the 0.09% increase, right? And understand why our current administration is saying no more, right? We're not going to be enabling you with a 3, 4, 5% increase, that we're just throwing more money at you. You don't need more money. You need to fix what's currently there, right? Yep, you need to fix what's currently there today.
You need to fix what's there. They kind of introduced this in the Medicare Supplement space, and I'm surprised that more of the Medicare Supplement companies aren't more supportive of this. I put a video out earlier last year on this. It's the wiser model, and that has to do with the prior authorization that they're doing in original Medicare, right? So one of the things that when you're selling Medicare Advantage versus Medicare Supplement, if you're pushing a Medicare Supplement policy, or if you think that a Medicare Supplement policy is a better option for your client, and in a lot of cases it can be if they can afford it, it's because they are on original Medicare. And guess what? Original Medicare, basically, if the doctor bills it, it's getting approved, right? If it's a Medicare approved service, they're getting approved, right? And so there was no prior authorization, whereas in Medicare Advantage, the insurance company's got to pay the bills. Now, this kind of goes a little counterintuitive what we were saying, but the insurance company is paying the bills, so they actually have prior authorization. Well, original Medicare never did. And now they're doing prior authorization, and they're doing it in the places where they're seeing the most.
But here, and let's think about this, right? So if original Medicare, right, is essentially, if original Medicare is coming back and saying, hey, we are going to, with prior authorization, using that $1,000 same example, well, ACA, group insurance, our billable rate for an MRI with these insurance carriers are $1,000. Well, that sets a precedence for original Medicare now,
Oh,
right? So the
it's
insurance carriers are driving up the cost over here, which is also driving up the cost with original Medicare, because I'm sure there's negotiations back and forth between the government and these hospitals and stuff like that. So insurers are driving up the cost. All right. These insurance companies are driving up the cost, which drives up the original Medicare cost, which then in return drives up Medicare Supplement, right, costs. And that's what we've seen with Medicare Supplements, right? They're used to making, call it 10 cents on the dollar, right? So they've got to, and there's actually, just like you said, there's actually a certain profit that they can only make, right? I think their loss ratio needs to be greater than 85%. Don't quote me on that on a Medicare Supplement. So their true profit can only be 15%. Well, guess what? They were losing, and most of the carriers that we were talking anywhere between 5 to 10 cents on the dollar. Well, why was that? Because rising healthcare costs. And again, where does that stem from? Right? I really think it stems, listen, I mean, we don't have a crystal ball. We can only go off of, what's essentially being told to us and what we're seeing in the news. But at the end of the day, where do I see that stemming from? I see it stemming from exactly where we started this conversation at.
Yeah. I mean, a lot of people don't realize that there is a loss ratio and how the loss ratio works. I mean, my clients didn't realize it back actually right after the ACA passed. I want to say it was like 2017 or 18. I forget the year. But a couple years into the Affordable Care Act, when they added in loss ratios to regular health insurance under 65, actually in my area, Humana had to return money to clients. So I had clients that got checks from Humana because their loss ratio was actually too low. They weren't, and the loss ratio is if out of every dollar that comes in, only 85 cents has to be spent on medical services or something. Like we said, the percentages don't really matter, but look, just to make it easy, 85 cents on the dollar has to be spent on medical services. If they don't spend 85 cents, if they spend 82, well, then guess what? Those 3 cents have to be refunded to the clients. And that's the way the insurance industry runs when the government is setting essentially all the prices because of how big Medicare is. And now you add in the ACA. I mean, it's a vast majority of the insurance market is set by the government, and they have to follow those rules. And so ultimately what that does is it drives the insurance companies and, drives everybody that's in the business. We don't want to paint the insurance companies as bad actors here, but doctors, hospitals, everything, it drives everybody to drive up cost, right?
It does. The nicest buildings in the Tampa Bay, call it Pinellas, Hillsborough area, are the hospitals. Yeah. I mean, the hospitals. It's crazy how much money, they're getting and the profits. We don't look at that type of stuff. We don't. So, I mean, and don't get me wrong. I mean, it sounds like we're saying that, the insurance carriers are the devils. No, we're not, because I mean, they're our partners and we do love them. But at the end of the day, it's gotten out of hand, and they've got to figure out, they've got it. This is happening in the boardrooms today, right? Just with ACA, with Medicare and everything else, we've got a broken system. How do we fix it without killing our stocks? Right. That's it. They're trying to figure out a way with what happened last night. And, I think you said up to 50%. I mean, some of them were almost 17%.
Yeah.
Some of them were almost 17%. And, they're now sitting in a boardroom all together trying to figure out now, how do we lower cost, fraud, waste, and abuse? And I wouldn't say fraud is one thing, but waste and abuse is another thing, right? I think the abuse is the bigger piece of this than anything else. And, like you said, the coding and, how do we drive up costs? So our 5% on a bigger number is a bigger number to, our stockholders, and it looks good and it drives up our stock costs and everything. We've gotten in a bad way, right? And now the current administration has figured that out, right? They've figured that out, and now they're telling the carriers, you need to go figure it out, right? That's why we're giving you, and again, this is my assumptions, but that's the reason why we're not going to give you 3, 5, 6, 7% increase, right? That's why we're going to give you a 0.09%. That's my thoughts on it.
I
But I mean,
I
the
agree
writing's on the
completely.
wall.
It ultimately, there's a lot of money here. And does the cost have to go up every single year? Does your reimbursements need to go up every single year? I know for a lot of people out there, yeah, people get their annual pay bump in their salary and things along those lines, but a lot of people don't, right? And a lot of people, they make the same amount of money from year to year. Why can't the healthcare industry essentially do that? And is it going to drive them to look for those efficiencies? I mean, there was a
Our
case that
group
I saw.
insurance went up when we were on the lower end. We're on a PEO, and we've got a couple hundred team members now. Now, not everybody is on it, but I have always asked, like, why are our group rates going up 15% year over year? Right?
We're in the insurance business and we're confused about the prices sometimes, right? It's crazy.
15%. That's absurd, right? I mean,
Yeah.
and then, but meanwhile, we're giving, our team members a 3 to a 5% cost of living increase, but we're getting 15% healthcare increases. Like, again, the system is broken. The doctors, the hospitals are making plenty of money. We know that. That's a guarantee. They are making more money than they need. Right. And it just goes to show, again, all these facilities and everything else out there. I mean, you turn every corner, it's like how CVS and Walgreens were. It's always, every other corner, you got this new ER station, right? There's no new urgent care, this and everywhere else. They're making more money than they know what to do with. And again, it goes back to that the more revenue that comes into the carrier and that fixed, my example, 5%, the more money that's out there, the more money they make, the more money that their stockholders make, the higher their stock goes up and everything else. Again, it is a broken system that needs to be fixed. And I'm hoping that's the conversation that's happening behind the scenes, between current administration and these executives at these insurance carriers. And there is a way to fix it. There's a way to fix it. It's not going to be good for stock prices for a while, right? Because you're not hitting your quarterlies, you're not hitting, all that type of stuff. But at the end of the day, there is a way to fix it. And the government's saying, if you don't fix it, we're just not going to, we're not going to give you, these monies. We're not going to do this type of stuff. Fix it or else. I think that's kind of where current administration is.
I've got two things on that I think are important. You're saying there's a lot of conversations probably happening behind the scenes, but I think there's a lot that are happening right in front of all of us, and that is what the DOJ is doing. I looked at a case, I think it was out of Arizona, of a lady that started a company that did skin grafts, right? And in like 3 years, she billed some crazy billions of dollars. And it was they were doing skin grafts on people that were in hospice care. I mean, hospice is end of life. We don't need skin grafts in end of life. We need actually maintaining our, getting rid of bacterial infections and things along those lines. We don't need new skin if we're getting ready to pass away.
Right.
But a square centimeter was like a couple $1,000s, and they were maxing that out. And so you've got that type of things going on where there's people all over the place doing dirty stuff, right? There were cases there's, I mean, heck, we're in Florida. It's the epicenter. There was a businesswoman that got a $6.5 million fraud. And that $6.5 million, is that going to change the government funding? No. But if you do that all over
1,000 cases or 2,000 cases of that's happening. Yes.
This is literally a lady in Loxahatchee, Florida, right around the corner from where I live. Loxahatchee is kind of the boondocks. It's not really a big area. And there was a lady, $6.5 million. Okay.
This is, I mean, now we're pivoting kind of from insurance carriers, right, to now the government, right? Fraud in the government. And that's where, Doge, essentially kind of, and we haven't heard, I mean, Doge was, of course, the biggest thing when Elon was in, and now you don't hear shit from Doge. Okay. Now, I know it's still happening, and I know they're still saving money, but this becomes a technology play, right? It becomes AI at that point to go find those things that are skin graft, ages 80 plus, right? This doesn't make any sense. What's going on? Let's go look at this.
Absolutely.
Right?
Yeah, using technology to be better, to save money. Everybody's talking about AI is the hottest new thing, and it's all over the place, and everybody talking about how it's going to make them more efficient. Well, hopefully that does the same thing in the insurance industry. Now, here's one of the second thing I wanted to mention is, how do I think this affects insurance agents
Yeah.
and our clients? I By no means do I think that this means that insurance agents are gone. Okay. If you're an insurance agent and you specialize in Medicare, Medicare Advantage, Medicare Supplements, you know how complicated it is. And you know, when you explain to your clients how confused they can be over, just the entire process. Well, I know that's the same case when I'm buying my homeowner's insurance or when I'm buying my car insurance. Even though I'm a licensed agent, I deal with insurance and I know all the terms and everything on the medical side. I'm by no means an expert on the homeowner's insurance and my car insurance. I still need that insurance agent. I need my insurance guy that kind of explains it to me and points out what's right and what's needed. And so I don't think there's any way or any place where the insurance agent is, replaced here in the near future at all, because of how complicated the subject is overall. And I think the insurance companies absolutely need us. I think we are necessary. If they cut the insurance agent out, then they're going to end up losing their members. And again, what is their goal? It's to make a profit. And if we're talking about Medicare Advantage, the only way they make a profit is if they have clients. If they don't have clients, they don't get paid. If they don't get paid, they don't get that 3-5% that they can make. So they need those clients. And so I think when it comes down to us, we are a part of the conversation. We need to do our part, though. We need to do business the right way. We need to make sure
that's what I mean. Humana, for example, we've all heard, recently with Humana letting go a lot of their, top call centers. And fortunately, we were not one of those, because we do good business, right? We as an agency do good business, but they've realized that it's not volume, it's quality over volume. Right. And they're figuring it out from a number perspective that, just somebody that signs up and they're on the books for 6 months and then they're chasing that extra free benefit, or the agent is, just selling that extra free benefit, the Part B give back or the free dental or grocery card stuff and everything else. It's not sticky business. It's not persistent, which in return does not make them any money, right? It's more of a headache. There's more CTMs, which then lowers their star ratings, which then they're getting less reimbursement by the government because their star ratings are down. So the carriers are making the right, and I specifically said Humana, but Cigna's doing it, Aetna's doing it, UHC's been doing it. Now, UHC's probably been the best at it, in my opinion, since we've been in Medicare Advantage since, 2022, really in Medicare Advantage since 2022. We've been in the Med Supp space for coming up on 12 years now. The carriers are finally starting to get rid of the bad actors of the space, which in return is going to clean up a lot of some of the mess that we've got going on now. Now, what do I think is going to happen from a compensation standpoint? We've already seen it. Most of these carriers at this point aren't doing co-op anymore, right? They were giving anywhere between $150 to $250 a deal on top of your traditional, CMS pay, right? Then you got your admin pay that's on top of that. That's anywhere between $0 to $250, right? That's still staying, right? They haven't started messing with admin dollars yet. I'm not saying that they won't, but they haven't up to this point. And then you add co-op dollars that were anywhere between a one-time, right? The admin is, the admin is on the renewal side of it as well. Whereas the co-op dollars, marketing dollars, is typically a one-time lump sum. And most of those carriers were paying anywhere between $100 to $250 a deal. $250 was a couple years ago. We haven't seen that in a while. Most of the carriers now aren't doing that. Right. Yeah. And I don't expect them. There's a couple carriers that are doing it, for Roy for rest of the year for 2026. But I think to get this thing on the right track, they're going to have to cut that out. Does it? And I'm saying this, right? This eats into EIP's profits. This is how I forecast from an advertising perspective and hiring and everything else. Like, it hurts EIP. Do I feel like the carriers do need to take a step back, clean everything up? And so that we've got an amazing industry going into 2027, 2028, the answer is yes. And it hurts, right? There's going to be a lot of people that watch this, my peers in the industry, our peers in the industry that, say, Jagger, you're fucking nuts, but at the end of the day, I think that's what we've got to do. We've got to clean this up. So 2027, it starts to look better. 2028, we're kind of back to where we were, and then moving forward, hopefully it stays clean, but we already know how that goes.
I mean, ultimately, it's all about incentives. And at the beginning of this video, it sounded like we were picking on doctors and hospitals and the insurance companies, but now we're bringing it full circle, and we're coming to us, the insurance agents and the insurance agencies. It's all about incentives and paying people to do the wrong.
Government to insurance carriers to insurance agents, agencies, FMOs, right? The FMOs that may not be actually writing business, right? TPMOs, FMOs, NMOs, whatever you want to call it, top of hierarchies, right? They've driven a lot of the issues that we've seen, up to this point as well. We as an industry as a whole, if we want this to be a viable product and something that we're able to offer, because the government may come in and just say agents don't deserve money, insurance carriers don't deserve money, right? Because you guys can't figure it out yourselves, maybe hence the 0.09% increase, right? We have to clean this up, and we all as a group, including everybody, have to do it. And that's, again, the government drives, they're paying original Medicare, right? They're subsidizing and paying, these ACA carriers, and reimbursing and doing a lot of that type of stuff. There's a lot of cleanup in the government as well, right? That needs to happen. This is across the board, everybody.
Absolutely. I mean, my uncle used to say, if you pay somebody to do something wrong, they're going to do it wrong every time. And I think this goes to kind of what we saw with some of the co-op dollar abuses over the past couple years. If co-op dollars are only paid on initial enrollment, then what does that do? That induces churn. What is churn? Churn is rolling clients over and over again. Well, if I can only get that co-op every time I end up enrolling a new client, well, then people are going to churn those people. That falls into fraud, waste, and abuse. That's an abuse
100%.
thing. If you've been in your AHIP,
go back to some of these. I'm not going to name names. We all know in the Medicare space who the big players are, right? The biggest players, in this space. And 6-7 years ago, they did maybe 10% of their apps were Medicare Advantage, right? It was dominantly Medicare supplements, right? And then all of a sudden these co-op dollars, the admin dollars started to increase. And guess what they started doing? They started chasing the money.
Yeah, it went from like long-term growing your book of business and servicing your clients and keeping them on the books. And that's how you made value and you earned a good living in this business, to heavy front end. And I mean, yes, obviously it costs a lot of money to run an agency, and it costs a lot of money to get those clients, do the advertising, get those people in the doors and get them on the books. But if all your incentive is year one pay, well, then your incentives are going to be kind of messed up, right? And so what we ended up seeing is we saw those Medicare Advantage clients. And if you've dealt with it over the years as an agent or as an agency, I'm sure you've run into a client of yours that changed their plan and didn't realize that they were changing their plan. Even though, I mean, if you're changing your plan and you don't realize it, I'm surprised that can happen. I think a lot of times it's people talking on the phone and not knowing, what they're saying, but they go through the enrollment. But people change their plans and they're like, I want to go back to my old plan. I thought this new plan was going to be the best thing. And so you saw a lot more incentive for churn. And I think that's probably what we're going to be getting away from. I think that's part of what's going on with the co-op. I still think it's a valuable piece of the business. I mean, maybe they adjust as carriers, how they do it. I know you and I have talked about this in the past. Instead of tying co-op to enrollments, maybe tying co-op to CTMs,
persistency, right? There's persistency kickers and that type of stuff. And that's how it should have been done day one. These carriers should have never said, okay, ABC and NMO, how many enrollments do you expect? Okay, you expect to do 500,000 enrollments. Okay, well, I'm going to go ahead and pay you upfront $250 or $200 for those 500,000 enrollments. And then now all of a sudden they've got to now they got to go onto their downlines and go, buy that business, essentially, is what a lot of them did, right? They wouldn't bought that business, but then targets were met. Then there was just bad business that was being done, right? It's again, I've said this to the carriers multiple times. I've said this to my peers, in the industry multiple times. It's now come to fruition, right? I've been saying this for years. It's the reason why we're one of very, very, very few shops, at least at the volume that we do, right? Tens of thousands of enrollments a year. We're one of very few shops that our agents are hybrid, right? Where they sell both MedSup and MA. We need to get back to, as an insurance agent in agencies, quit chasing the short-term cash, like you said, right? And look at what's in the best interest of the client, which in returns means persistency and lifetime value is much greater, right? The carriers always, we've had a lot of carriers and over the past couple of years, and, they're always like, Jagger, what's the secret sauce? What are you doing? Oh, well, it's because you're leads. You generate, high quality, intent leads and stuff. And we say, no, yeah, we do. We generate some of the best leads in the industry. No ifs, ands, or buts about that. But it's the way that you handle the consumer. You do needs analysis, you do fact finding, you do education. Curt, do you want a Medicare supplement? Do you want a Medicare Advantage? Right. And then from there, now we go into the product and we look at, rate increase history for a MedSup carrier. Right. We look at FG&N, right? Well, what are we going? Well, GNN right now, what are we looking at, from a product and actual, coverage standpoint, product specific. And then on the MA side, doctors, hospitals, right? Medications, what is your wants and your needs?
You've got to look at the entire client. You have to be holistic. And I think one of the things that we've seen is people moving away from that and specializing in one thing. It's like the car business, right? You can get anything from a smart car or a Honda Civic all the way up to, a Maybach, and a Maybach's not going to work for everybody. Maybe everybody wants one or a Ferrari, but it's not the right car every time. And you know what? Some people are going to be just happy with that Honda Civic. But if you're throwing everybody in the Honda Civic, sorry, Medicare Advantage for this analogy, but if you're throwing everybody in that, well, maybe not everybody's a Honda Civic person. Maybe they want that Mercedes. Maybe they want the Plan G and the top of the line stuff. And so if you're doing that needs analysis, ultimately what you're going to do is you're going to put people in the right plans. They're going to get the coverage that they need, that they want, that fits them, and it's not going to cause them to churn and move all over the place, and it's not going to drive that up. And I think heck, if you, I just said heck, that I sound ridiculous, but if you think about it, the insurance business was a great business for people that were doing it before all of the kind of churn and burn that's going on nowadays. And you can still be there. We can still have successful businesses, grow great companies, great agencies, and thrive and provide our clients with good service and get them in the plans that they need. And then that'll end up making the insurance companies happy. And so if we get rid of some of our part of that fraud, waste, and abuse, FWA, that churn, and then the hospitals get rid of some of theirs, the doctors get rid of some of theirs, and then the fraud people are just in jail, it's going to drive down costs for everybody.
Oh, well. It does. The biggest thing goes back to the consumer. What I said earlier, right? It goes back to the consumer of these costs. We've said it time and time again, from ACA to group to, Medicare. Now, Medicare and Medicare supplements are a little bit different. I still think the cost could be cheaper. 10, 15% rate increases year over year are obscene, right? That's crazy that we're seeing 10 to 15. I don't even like 5 to 6% increases, let alone 10 to 15%. But it goes back to, we got to go back to the beginning, right? Medicare's got to cut out the fraud, waste, and abuse. Medicare's got to work with these insurance carriers to figure out, from a profitability standpoint and everything else like that. There's no reason why you can go pay cash for an MRI of $100, right? And an insurance carrier, like, I love the fact that they are these hospitals are going to, if the great healthcare plan goes through, and I'm sure they'll call it Trump care or, something along those lines. What they actually got to put out, the price sheets of saying, hey, this is what it's going to be.
Transparency is key.
The transparency is huge, right? And what does that do? That means that the consumers are going to go back to the carriers and they're going to, they're going to raise the stink, or they're just going to start paying cash, which in return means that the revenue is going to go down, right? Consumers are going to figure out a way. They just don't know what they don't know. I've always known when I go to the dentist how much for a root canal, paying cash versus going through my insurance company. I've done that. I've done that for a very, very long time. There's a lot of consumers that don't understand that today. Now, with the full transparency, if this ends up going through, they're going to know it, because there's going to be a sheet that's going to have to be posted somewhere, right?
Yeah,
for that, or
clearly posted in the office, the prices
exactly
of things.
There's a lot of moving parts here. We're making it sound like, we've got the crystal ball to fix healthcare and the cost in healthcare. The healthcare costs are obscene, right? And again, I make money off of that, right? The higher the monthly premium on a Medicare supplement, the more money we get paid, right? And it's not the right thing to have 10, 12, 15% increases. Now, again, to the Medicare, on the Medicare supplement side of it, right? They've got to go to the DOIs and show their loss ratio. They got to say, and again, I don't know if it's a 15%, that they're allowed to profits, 5%. I don't know exactly the numbers, but they've got to go to they got to go justify and say, hey, we need to take a 10% increase. Well, here's the reasons why, because our loss ratio was 100%, right? Or 95%. We got to get to a 15% profit, at that point to accommodate for our operational costs and, everything else that's associated with that. Right now, they've got to go justify that to the Department of Insurance before they can take the rate increases.
Yeah. The government has to approve it. They have to
the government has to approve it.
And if you look, if you've got CSG or any quoting tools, a lot of times they have loss ratios, and you'll see some plans where their loss ratio is actually 102%.
Yeah.
where
they're losing $2 on every,
they lose 2 cents.
That's crazy. And again, they're not, and this is the reason why we've seen the volatility even in the Medicare supplement space. Like, again, there's no comparison. Somebody that can afford a Medicare supplement, and it's, the right policy for them. I can show you every statistic, imaginable, from a customer service perspective. Medicare supplements are amazing. There's a need, time, and a place for both, though, for a MedSup and a Medicare Advantage. There's a lot of people, and I have 1 minute over on my next meeting, but this is the reason why we have some of the largest call centers that are coming underneath us on the brokerage side right now to learn how to have their agents sell both Medicare supplements and Medicare Advantage. I just had somebody text me literally last night and say, hey, they're going to take their entire MA team and make them hybrid, right? And sell both Medicare supplements and Medicare Advantage, which I'll tell you more about that later on. We've got a lot of these groups are saying like, hey, I want to start doing things the right. I wouldn't say they're doing it the wrong way, right? They're just doing it. They're doing it the way that they know it. Now, what does that mean? I think the government and these insurance carriers need to figure out to get the compensation from a first year. You hit it right on the head. The reason why a lot of these call centers are doing this, they're making far more first year cash from a Medicare Advantage than a Medicare Supplement, right? Mm-hmm. If we can figure out a way to get the first year cash a little closer to, right, then, I think we'll see more of that mix go back to Medicare. Everybody's like, oh yeah, MA is, overtaken original Medicare, and it has, right? It's over 50% now. Why?
Because you can make
go back to the videos that I've been doing years ago. It's because of the fact that agents are being incentivized to do it, and that's the reason why it's happening. If all of a sudden you flop the compensation that's up to MA, guess what you're going to start seeing that trend line do? Right now, all of a sudden, you're going to see original Medicare going back over Medicare Advantage, right?
Incentives
from a carrier standpoint, they're making more money.
Yeah, incentives matter ultimately, is what it comes down to. And one of the one thing I want to point out that we talked about is cost plus. As insurance agents, what do we make? We make a percent on premium, or we make a fixed amount on our MA, and so we are kind of in that cost plus. One of the big differences between us and the the hospitals and doctors, we don't set the prices.
Yeah.
Right. I can't sell you a Medicare supplement any cheaper because you're my friend or family than if I don't know you. I don't have a deal, right? The carrier sets the price. That's the price. If you buy it from me, if you buy it from the next guy down the street, or if you buy it directly from United Healthcare, you're getting the same price, right?
Yeah.
And so our incentive isn't in terms of driving up prices. We like to see those lower prices. We like that. We like that in communication with our clients. Hey, instead of saying, yeah, you've got a price increase of 10% this year, I love to hear, hey, you got a 5% price decrease. I sound like a hero, right? And so, we don't want those prices to be driven up. We ultimately want stabilization in the market. It makes everybody happy. I mean, prices don't have to go up every year on everything. We've been kind of in a weird space the last couple years with inflation and everything.
It's been doing it the 7 to 8%, right? When I first got in the Medicare supplement, it was 10 to 12%. I think that was just product being priced the wrong way because it was such a competitive space, in the med sub space back then, so they were trying to be competitive. They just didn't actuarial have their statistics the right way. But then they start figuring it out. But then we're still seeing, Curt, 7-8%. It shouldn't be 7-8%. It should be 2 to 3%.
Do you remember what a Plan F cost back when you first started?
I mean, it was it was
like if you're selling a Plan F in Alabama, because I feel like that was like the cheapest state.
I mean, the EIP back in the day, we were sitting closer to 1,200, where now we're sitting closer to 1,800, right? And that was 10 years ago. That was 11 years ago, right? I mean, that's crazy, right? That is absolutely crazy. So, I mean, I hope this video gets in front of, not only the insurance carriers, but some people in the government. Hopefully somebody watches this and better understands, some of the stuff that's ultimately going on. But when it really boils down to it, you as an agent, right? Our followers are agents. Just do the fucking right thing, man. Just do the right thing for the consumer, right? You can figure the compensation. I promise you, I can show you statistics. Reach out to Curt, reach out to me. I can show you statistics to show you from a lifetime value perspective, which is really what you should be looking at, right? If you do the right thing by the consumer 100% of the time, you will win. You will win. It'll win. Right. And this is the reason why we have a whole bunch of groups that are coming under our brokerage side, under Curt's division, because they want to learn how to do business the right way. Right. And that's what we're here for. We're also doing a ton, we've seen that tons of volatility, unfortunately, in the Medicare space, everything we just talked about over the past few years, so we started a life insurance division, which we're doubling down on this year. I did the math this morning. We'll probably, we're in the 14th month that we started the business. By the end of this year, we'll probably do over 25 million in annualized premium, in our second full year as a company. We started that thing from the ground up. The reason why we did that was because of the volatility, in the Medicare space. I mean, we didn't want to have all of our eggs in one basket, so we decided to start life insurance. We've been really happy. And we've had some of the largest Medicare groups that are coming over us and learning how to sell life insurance. And we're essentially giving them the playbooks, on that side of it. So, if it's something you're interested in, reach out to us at brokerage at teameip.com. Reach out to me personally, reach out to Curt personally. We can get you into the office, have a conversation. We are looking to probably bring on 4 or 5 more groups. We don't want onesie twosie agents. Have a lot of onesie twosie agents that reach out to us. Of course, that's where I started 10, 12 years ago. More than happy to kind of point you in the right direction, stuff like that. But what we're looking for is some big groups that are looking to change up the way that they're doing business. And we're more than happy to help you out. And but at the end of the day, we are going to ask for your contracts. Your contracts are going to come over to us, right? We've got to get something out of this relationship. But at the end of the day, I promise you the value of what we provide at EIP is significantly greater than 99% of the people that are out there.
We're still operating. Now, Jagger, I know you said that you're already late for another meeting, but real quick, you brought up life insurance. I think this is super important. One of the things that we talk about with our life insurance carrier partners is our persistency and how ours is significantly higher than our industry peers. And I think that ties back into exactly what we're talking about on the Medicare side.
Exactly. The exact same thing.
Incentives
do the right thing, needs analysis, fact finding, education. Now, education's quite different, MedSup versus MA, original Medicare, all that type of stuff. You got term, you got IULs, ULs, final expense, whole life, right? But if you do needs it and you're not pushing premium on you.
That was what I wanted you to bring up. Don't incentivize premium pumping. That is the death.
Every group that you follow enough on Facebook, I do too, right? That I see a lot of these Facebook groups, and it's, oh, so and so agent did $10,000 in AP this week. Why? Quit. Stop. How many people did we help out? Right? You helped out, 10 people this week. Hell with the AP. At that point, you're incentivizing bad habits, right? And the carriers, and again, they only have, and we really didn't even start really writing until mid-year, right? It was our first real big class that we hired. Mm-hmm. And, the carrier like Mutual of Omaha, we went out to dinner with them. And Mutual of Omaha is one of our core carriers, love them on the Medicare side, love them on the final expense side now as well, on the life insurance side of it. And they just said, we went out to dinner a couple weeks ago, and she's like, how are you doing it? And again, is it the leads? And it's like, no, if you just do the right thing by the consumer. And just, I'm going to throw out some statistics because this is going to run into a couple, I'm sure, final expense groups. Guys, we're from a placement perspective. All right. So from submitted to effectuation is what we consider a placement. We're in the high 80s. Okay. First year persistency. Now I've got a year's worth of data. We're sitting at 83% first year persistency, right? Most of these groups, Kurt, you've heard it from the groups 50. That, are coming under us. They're modeling it out. What, 50%, 60%?
Yeah, absolutely. It's basically, you're getting yourself into a short-term loan situation. And now you're at the payday lender when you're running a business that way. You got to keep, it's a Ponzi scheme. And so if you do it right and you're not pushing premium, and that's not the main focus is high premium, then what you end up doing is putting clients with the policy that they can afford and the policy that they need. Everybody wants $1 million of insurance. Not everybody can afford it. And so if you get them and you have that conversation with them, put them with the policy that they can afford, they're going to keep the policy that they can afford. That's better for them because when they ultimately die and the life insurance policy pays out, it will pay out. If you sell them a policy that's too expensive, they're not going to keep it. It's not going to pay out. The insurance company is going to lose their butts on it from the beginning because you've overcompensated in the beginning. They can't make their money long term. And so everybody needs to find the place. It's an equilibrium. If the client's in the right spot, then they're actually going to get the services that they paid for. The insurance company is ultimately going to make money in the long term because of how life insurance works. And we can do a whole video on how that is and the economics of life insurance. But what you have to do is do it right. And then ultimately everybody wins. That's how insurance works, is if the client gets the policy that they need and afford, and the insurance company gets the client that they need and afford as well. Right. Yeah. And so you've got to, just do it right. And ultimately it levels itself out. And so I think that's ultimately what we're getting at here today is in the Medicare space and the life insurance space,
it all works together. ACA to group to Medicare to life insurance, right? We all have a part in this, and,
absolutely.
Going back to, it doesn't surprise me. I didn't even know it, before Curt told me, kind of our topic, for this meeting. And as I was looking through the data and the statistics, like, it doesn't surprise me that there's almost a 17% drop for, two of the largest insurers in the world.
Yeah.
It does not surprise me whatsoever. And I'm surprised. I did go look whenever Trump came out with his, the
great healthcare plan,
right? The great healthcare plan. And we did see a little dip, but we didn't see this, right? And this kind of comes with, on top of that. But at the end of the day, listen, that's what we're here for. I've been doing this for a long time. I feel like I've got an amazing name in this industry. If you're looking for somebody new to work with, right, and doing business the right way, guys, we're your partner. right? We're your partner. And again, we only take on a few shops a year. I think we added 3 on last year. We've got 3 in the pipeline this year. Probably add on 2 to 5 more, right? Depending on our capacity. We can only do so much, right? For our partners as well. In the event that we're doing training and we're doing, a whole bunch of different things, in office with a lot of these groups, we don't want to get to a point where we're spread really thin, right? We want to be able to bring that value. So we're very selective of who we work with, right? But at the end of the day, it never hurts to reach out, have a conversation with us and see where we go.
Absolutely. Hey guys, reach out to us if you have any questions, and I hope this was useful, and we'll be back again. We'll talk to you soon.